Hi and welcome to the FinancialFox Gold Edition. This is literally a gold edition as we will be talking about gold with two industry experts. Amanda Van Dyke, Investment Manager and Managing Director at South River Group, and Eamon O'Brien, Chairman of London-listed IMC Exploration. How are you both today?
Very good, thank you.
Very good, thank you.
Okay, Amanda, I would like to start with you. You are a key figure in the mining industry. You have a rich experience as a fund manager, mining advisor, former chairman of Women in Mining UK. I mean, what we are seeing is that gold prices has been rising quite substantially. Banks has been buying gold heavily over the last 6 months, and gold analysts still think the price of gold is gonna still climbing as demand keep up. What's your take on the current gold market?
We've had a great year after a very long bad year, and gold is basically wealth insurance. So people buy gold when they fear that other forms or other assets are not going to do as well. And we're in what I believe might now be the longest bull market in recent history, and a lot of people are hedging their bets. In addition to that, real governments around the world have been reinstituting quantitative easing, and the Federal Reserve has been cutting rates. That means that gold goes up, and gold's had a good run. I think the next run will be when we have the next leg up from here, as it were, will be when we have a more sustained correction in the markets, as well as potentially more cuts.
So just to explain a little bit more in details, how investor can buy gold?
Well, there's a number of ways you can buy gold. You can buy physical gold coins if you really want to, and you can put them either in the bank or under your bed. You can buy an ETF to buy gold bullion directly if you'd like. You can also buy an equity fund that has a mixture of gold equities in it. Or you can actually buy directly gold equities for yourself. Which tends to be the best way to get leverage to the actual gold price.
And picking up on this, we are seeing signs that actually investors are restarting to invest into equities rather than just get exposure to safe haven assets. What do you think is going to be the trend now on this?
There's been a large-scale anticipation, as I said, of a market slowdown, and gold has been keeping pace with that. Usually, you want to look for safe haven assets, and safe haven assets are things like gold. They have been in the past property as well. We're not sure if that'll go in this. Bitcoin is a new alternative form of gold that some people are buying into as well. There's just a lot of places you could be, but you want to go into things that are less volatile and that are less subject to market whims.
And how investor can optimize their exposure to both gold and stock market gains? What should be the ratio within their investment portfolio?
That really is directly up to the people and how much risk they're willing or able to take. On a general basis, like in any market, people say 5%. When you think you're going into a bad market, you usually double that to at least 10% exposed directly to gold. That's assuming that your house and your property takes up a percentage of your portfolio, regular investments, bonds, and generalist equities as well, being in that mix as well.
Okay, talking about equities, here with us is Eamon, so chairman of London-listed company IMC Exploration. IMC is focused on exploration of gold-based metals in Ireland. Why do you think investors should look at a small cap company like yours to optimize their returns?
Well, first of all, as Amanda said, with quantitative easing and lower interest rates, people are generally looking at the stock market and equities for a better return. I mean, you can buy gold bullion and it costs you to store it and it doesn't give a dividend, whereas an equity company always has a good upside potential. I mean, you get a fluctuation in gold prices maybe of 10 to 20% or sometimes a little more, whereas you can get a multiple of your return if you invest in a small market cap company like ours. We recently got listed on the London Stock Exchange on the 8th of July just this year. And we are a base metals and gold company, gold exploration company. And not only that, but we have also established an inferred mineral resource estimate for in relation to our company. In our spiles and tailings, we have of the order of 70 million in the spiles and tailings, which is above ground, not below ground. And in our Kilmacoo project, we have 35,000, which was pre-2012, pre-job code. So, you know, looking there, you have of the order of 55,000 ounces of gold. You have another, as I said, 40 million in other metals. And if you look at a small market cap company like ours, you know, there's inferred assets, real assets of about 120 million, and our market cap is less than 5 million. So you can see that there's a lot of upside potential.
Picking up on this, Amanda, what will be the valuation, fair market valuation for a gold company?
That's a very tricky question. There's a lot of different ways to value a gold company. You can value it at ounces in the ground. You can value it at its net present value. The most common thing people do, though, is to take similar companies of a similar size with similar assets and compare them and say, what are they trading at as per ounce in the ground? So you would look at other junior companies with similar types of assets in different parts of the world. And that's usually the fairest way to get an idea of what it could trade at.
Okay. Eamon, you mentioned that you recently announced an MRE for the Avoca Spoil and Tailings project. Now, what is next? What are you working on?
Yeah, well, IMC, as you mentioned there, our MRE came out in September, and that was on the Spiles and Tailings project in County Wicklow in Avoca. That was based, as I said, it's the early stage assessment, and it was based on an assessment of 2 million tonnes of tailings. Now, we believe there's of the order of another 5 million tonnes to be assessed. Furthermore, even some of these heaps are so big. One is called Mount Platt. We believe that further down towards the base of the mount, that the density of gold, silver, and metals would be much higher. So what we're going to do is we're actually going to prove up that figure. I mean, as I said, it's worth about 70 million of metals just in the spiles and tailings. And that's basically what we'll do with the MRE is bring that value up. We're very confident that we can do that.
Another thing that we should mention is about your partnership with the Trinity College of Dublin, who actually choose your project for study and research.
That's correct. Just actually before I joined the company, which was last May, 12 months, Trinity College had approached our company, made a cold call, and said that they wanted to collaborate with us in relation to the Kilmacoo. The thing about where we're located is that, and why it's of interest to Trinity, is that we're in the Leinster block. Ireland is divided into sort of two big blocks, and on the block to the west and north, the huge Dalradian find was made. That started off being believed to be 1.5 billion in the ground, now up to 6 billion. But the gold has never been found in the Leinster block, and historically, gold has been panned even in Roman times, and the mother lode has never been found. So Trinity contacted us, and we asked them, well, why did you come pick our particular project in Leinster? And they said that they felt it was, well, first of all, they said they reviewed about 40 different projects from Sweden to Spain, including Ireland, and decided that ours was the most interesting and most prospective. And as academics as well as that, they wanted to be associating with finding hopefully the mother lode, but in particular as well then they're doing characterization analysis and a lot of work that would help point us in the direction of further exploration to try and bring up the level of gold that beyond the 35,000 ounces that is believed to be there already.
Let's talk a little bit about ethical practices. We are seeing that smart mining, eco-mining is kind of a big thing at the moment. What interest do you see in the market, Amanda, for some of these projects?
I wouldn't say eco-mining per se is like people aren't looking for ecological mining projects. But that being said, if you're listed on a sort of Western first world, as it were, exchange, London, Toronto, Australia, Hong Kong even, You need to come up to international standards. And the international standards for a listed mining company are extremely high. You need to have a very high level of reporting on environmental, social, and governance issues. So realistically, you have to come up to tier 1 standards if you wish to be available for investing by Joe Public, as it were. So really the era of what you might call very dirty mining is over, not if you want to be able to play with the big boys.
Eamon, what are you doing, what strategy are you implementing in IMC to tackle this
Well, everything
issue?
that Amanda says is right, and in fact, over the years, often people played fast and loose with the rules, but regulations are very much in play now. For instance, in relation to our spoils and tailings project, before people might have tended to leach out the gold or the metals out of it, whereas we would be looking at doing microgravity separation, which is a much cleaner way to abstract the metals. That's one thing. The other thing, of course, is that we are an exploration company, so a lot of our main activity would involve, for instance, drilling. But we can't put a drill on site in Ireland anywhere without actually complying with all of the regulations that are set out by the Environmental and Mining Department. And that includes things like where are you sourcing your water, what are you doing with your waste, what have you mapped out the historical and cultural places that are there, have you taken account of wildlife habitats. So it's very comprehensive, and we have no choice. We wouldn't want to either to have any other choice but to do things the right way. But as Amanda mentioned, the legislation is there, and we abide by that in terms of drilling.
Okay, very good. Amanda, you did mention before about geopolitics and how they have a big part in the gold market. We have got the US election coming up next year, the trade war between US and China, now Brexit. Where do you see the gold price reacting from here and probably also looking at next year into 2020?
Well, I would say that it's not directly geopolitics. If you look at sort of direct geopolitics, it isn't really that affects gold perhaps as much as it used to in the past. But geopolitics has a huge effect on certainty in the markets. And that when the markets react, gold reacts to the markets, because gold is ultimately it's an asset class that's a financial asset class. Despite the fact that it's a commodity, it's much more like it's not used. It's a store of wealth. And so when people are worried about markets, recessions, anything like that, and wars, they react to that by going for a safe haven asset, by putting their cash into something they think will be resistant to uncertainty and ups and downs, and that tends to be things like gold.
And do you think the correlation between gold and dollars is going to still be inverse, or because we saw that the dollars was up and actually the gold was keeping up, so we saw some anomalies recently?
So there are 3 major factors that affect the gold price, and they have to be taken together, and they're all inversely correlated to the gold price. So when the general markets like the S&P and the Dow Jones go up, gold will tend to go down a little. When the dollar index goes up, gold will tend to go down a little. But also, the most fundamental thing that affects gold and investing in gold are real rates of return. So everyone's heard about the inversion of the yield curve. When you can't make money investing in dollars or in bonds, when those yields are negative or coming or just headed down, that's when people want to go into a safe haven. And what happened is with the Federal Reserve rate cuts, that was happening because that meant you can get less of a return in things like dollars and bonds, and that's why gold started going up. Recently, you've had a small rally in both the dollar and the markets, and gold has come down with it. Yeah. But when there's a rate cut, or when we anticipate a rate cut, that's one of the biggest things that's going to affect the gold price. And the recent rise in gold prices has been largely because of the change in real rates of return in the larger market.
Okay, to wrap it up, would you like both of you to give your top tip to investors?
you should, at this point in time in the market, in order for safety, to have an allocation to the gold. And the safest allocation to gold is a diversified portfolio of gold that would include a combination of large cap, mid cap, and small cap explorers to sort of diversify your risk and make sure you get a maximum return.
Yeah, well, I would suggest that given the there's a sentiment now for batteries and base metals that people would invest in the mining type companies or mining exploration companies, and in particular if they want to have a higher return. As Amanda says, they should have some of their money in the small junior companies such as IMC. And also I think that they should look at the the resources that the company have and compare that to the market cap. And if they think the market cap is quite low, which I think in the case of would be the case with IMC, is quite low relative to the assets, then there's obviously much more upside potential to be looked at there, those kind of companies.
Okay, thank you very much. Thanks, Amanda, for your insight, and thanks, Eamon, and good luck.
Thank you, Vera, for having me.
With
it was a pleasure
IMC.
to fly from Ireland over to you.
That's fantastic. Yeah. Okay, this is everything from the Financial Fox. I see you next time.